Good day. Ira Epstein of Linn and Associates with your metal market wrap-up, and this wrap-up is for Monday, the 21st of September, 2020, just after 5:30 p.m. Central Time, the last official day of summer. Tomorrow, in America, we begin fall. So interesting. Fall we did. If you watch the stock market today, it literally fell out of bed. We did have a late day rally in the NASDAQ. It's giving a chunk of that back. It ended up about 60 points, so giving back about a third there. Metal markets got hit very hard. Silver especially hard today, down almost to what, $3 almost an ounce, 2.5 lower at the end. The dollar super strong against foreign currencies where people have that bet on wrong right now, or maybe they don't. But in any case, the bet has been that the dollar would sink, the euro would go up, and we're seeing the exact opposite happening right now. Energy markets got hit hard today, as word in Europe is that they might be going into second phases of shutdowns, be it in Spain, be it in the UK. India's really rocking and reeling from what's going on there. So a lot of bad news happening. Nothing new on the COVID case. And of course, add to that, unfortunately, the death of Ruth Bader Ginsburg, and that opens up another can of worms. So all this happened over the weekend, and away you're going on the downside in the markets. Now, in the weekly chart of closes of gold, you're down for the week so far $43. So that's a big break so far. You're down 2.23%. You can see how the market is now down from that high, just about, what is that, $100 an ounce, okay? Nothing unusual, and I want to keep pointing this out. You still have not come out of this August high to August low. That range, once we made it, we have not come out of it. So with all the crazy action, it's still there, and I've been pointing that out each and every time. The trend of the market has reestablished itself into a downtrend in the sense that we have the swing line with lower highs and lower lows. The definition of a downtrend is typically a pattern of lower highs, lower lows. To break that pattern, you'd have to get over 1968.20 on the current chart pattern, which is in rough figures, about $50 higher than this. Resistance in the market, I will call it the 18-day average of closes. I call that the line in the sand. The reason for it is when the market is over it, I give the market upside bias. It's a filter on the swing line. When under it, downside bias. When you break hard, it is not uncommon to go back to that number to figure out what to do next. Just the way if you rally hard and you drop from there, you come back on that rally, and it's not uncommon to stop right in this general zone and try to figure out what to do. That is how moving averages come into play. Now, something else. One of the things that I teach in my charting course is that the first time you hit a Bollinger Band, be it a high or a low, it is not uncommon for traders, algorithms, whatever you want to call it, to build in that because that algorithm called the Bollinger Band is a predictor in the sense that the market will trade 95% of the time within the band, that the first time you hit it upside or downside, that's where some traders take money off the table. How much money, their trading method, everybody has a different thing, as you can imagine. But that is not a surprise to me. I still see resistance at 1951.90, and momentum is still down. So the bears have control of the market. You are within this basic sideways action that has narrowed in from the broadness that we had in August over here, but the bias with this action today is back to the downside. We had upside bias in this level. Now we've got downside bias. It culminated on the upside here. Will it culminate on the lower Bollinger Band? The gold-silver ratio, silver's taken a beating against gold, and you can see that. The market's left that quiet action. It had a 22, it's back up to a 77 differential. In silver, you can see how you broke out to the downside. The market, unlike the gold market, went right through that Bollinger Band. I won't change my opinion. The market will trade within that 95% of the time, unlike gold. You're oversold already. You've hit the downside, broken out of this pattern. Are you going to stay out of it and call this a top at the end of all this? That's what remains to be seen. Right now, don't know, but sideways action often either forms a base or a top. If this is a top, I think it catches a lot of traders not suspecting that. The copper market is still acting good, which I think bodes well for the silver over time. You still have the pattern of higher lows, higher highs. Last week we went up, as you can see, to the upper Bollinger Band, and no, I don't change my opinion. That is where I think the pros took money off the table. I realize today it got a little higher, but look at how much it's come back from there. That's a move, that's a one-year move in itself, going from the 312 area back to the 303 level. That's a pretty big move in many times. What is the pattern? We have divergence. You have momentum pointing down. You've got the swing line up, and you're trading right on that line in the sand, the 18-day average of closes. In the platinum market, let's come back here. This is how the market looked coming into today. You had a pattern of you could argue, a higher high there, and you could argue you had higher lows already. This is how the action looked on Friday. What you don't want to take out is right here, that 925 level. As soon as you did, you fell back to the lower Bollinger Band on the 100-day average. I certainly didn't know that would happen. Interesting trade. The risk on the trade, if you sell at 925, pretty big. You got to risk back over the 950 level. And again, you didn't have a sell signal. You had, if anything, you were higher lows, higher highs over that number. I think the pros were considering buys at the 18-day average with the stop under 925, and I think they did that. I think they absolutely last night went long in those ranges, and then when that let go, the rush selling took in. Now what do? Well, I think you're going to hold the Bollinger Band, and that's one of the theories I have. So you could run it, but I'm guessing that the pros took off any shorts they had against that number. Now resistance shows up at 886.5. Momentum is down. The risk factor to go short down here is very large because it's back over 950.60. I just think the pros might sideline themselves a little bit. It was a big trade today. Then we get over to the palladium market. So let's look at the market without today. You had a higher high, lower low pattern. There is no trend. The market came up, made a higher high last night, and then let go of everything to the downside today. And as you can see, you're fighting a battle here at 22.92 is the last price, just under the 18-day average of closes. Momentum pointing down, trend down. So the key to this market, it will be if you take out today's high, Monday's high, that would be something, but I'm not expecting it. I just think you're going to fight right here. And the markets, all of the metals look like they've rolled to the downside. At the same time, the dollar index. So if we take a look at the dollar index, last night this market went down and made a low of 92.75.5, which is under 92.79. It then came back with a vengeance, rallied up to the upper Bollinger Band. What do you think happens at Bollinger Band highs? I think the pros come out. What happens at the lows? I think they come out. And that's what I think is going on. I think you're just churning right in here. We're going to be discussing all this tonight in our newsletters, in our commentaries. You know, for a lot of you, if you listen to David Hightower, he's got a large following. He's one of the Merck people that they put up for the different reports. Well, he also reports for our firm. And he comes out with a special recording 3 times a day on the softs, the financial markets and the metal markets. So if you're a metals trader, you might want to be paying close attention. That's all in our charting software. We also cover a lot of this in writing, of course. So if you haven't tried our different programs, our different charting software, our market research, this is a good time to do it. This is an exciting time. Go to our website under free offers, sign up for what you want. We'll make sure that you get it. Take a listen. Read what we have to say. Covers futures, options on futures, and spreads. We write for futures traders. I think you'll find it interesting. Let us hear from you. I'm Ira. You have a good day. I'll see you all tomorrow.